Hello friends, how are you doing? In the series of Elliot wave principle, today I will discuss the failed or truncated wave. I have decided to go with this topic as it has got many benefits because we know that Elliot wave is consist of 5 waves, but if the failure of means fifth wave failed to cross the third wave's length, then it is called as the failure or truncated wave, and it can give us a signal of trend reversal, and that is very useful in trading. So friends, keep watch this structure carefully. In the uptrend, the structure will look like this: wave 1, wave 2, wave 3, wave 4 and the wave 5. If you will notice carefully, wave 5's high is lower than the wave 3. So another principle comes into here, effect here, that the lower highs. And then I will show you the various other structure. Wave 5 itself can consist of so many waves. That is the another thing. So I will discuss all these things in detail in on live chat. Before that, I will show you the guidelines and rules how you can identify the failed or truncated web, and we will go back to the live example where that will help you out to easily spot the failed or truncated web. So let's begin. First of all, you will need to keep in mind some principles so which will help you out to identify easily fifth wave. So first of all, if you are already familiar with the Elliott wave is consist of 5 waves, and generally wave third is called as the extended or longest wave when we compare wave 3 with wave 1 or wave 5. So the important thing is that in today's principle means when the principle got published, that time it has considered as wave 5 or wave 3 can be extended, but in these days wave 3, most of the traders focuses on the wave 3. It should be extended and should be longer than other two waves. So failure means generally what happens, wave 5 crosses above the length of the wave 3, means it makes new high which is obviously higher than the wave three's highest point. So but when this failure happens, fifth wave's high will be lower than the wave three's high. So that itself signals that the buying pressure is about to exhaust, and the instrument can see a trend reversal from that point. So this is the actual benefit because this can give us so many trading opportunities, and it can be applied on any time frame. You can apply it on 15-minute time frame, 30-minute time frame, hourly time frame, and 4 hourly time frame, or daily time frame, or weekly time frame. So there are no limitations on time frame. You can apply it on any time frame, and very it will be very easy. Once I will explain to you on chart, it will be very easy for you to identify and apply it in trading. So rules and guidelines, let me discuss once again. As I told that wave 2 cannot be longer in price distance than wave 1. So so many times I keep you telling that because this is the main thing to identify the Elliott wave principle, that wave 1's big starting point of wave 2 or end point of wave 2 should not be longer than the wave 1, means wave 2 should not go beyond the starting point of wave 1. Then another thing is that wave 3 cannot be the shortest one. As I told you, these days most of the trader focuses on the length of the wave 3. It should be higher than the wave 1 and 5. Wave 5. Then another thing is that wave 4 cannot overlap wave 1. Means if the wave 1 comes back to wave 4 comes back to the starting point of wave 1 or the end point of wave 1, that cannot be called as the Elliott wave principle. Sometimes there are different patterns are there, diagonal triangles, as I have discussed in previous webinar. That is the pattern which usually happens in wave 5 or in wave 3. That I will carry on this series for upcoming days. So all these topics I will discuss in detail. Just keep it for the time being. Just keep in mind that wave 4 should not come to the area of wave 1. The better I will show you on chart. Then wave 5 will not go beyond the wave 3's highest point. So that will signal the end point of the end of the ongoing trend, and we can look for a short trade opportunity if you are applying the Elliott wave principle in uptrend. So friends, let's begin on chart. Here this is the 4 hourly chart of the USD CHF. We have got the base structure here, then the higher high principle. If you will notice, this swing high is higher than the previous high, so trend is about to begin. Now what we can do, that we need some base structure before we identify the Elliott wave. So we have got the double bottom. Even we can identify this as a wave 1, but it haven't seen a breakout. So I generally, when I apply Elliott wave principle, I look for a breakout. Means, because we generally know that breakout happens when buying pressure exceeded the selling pressure, and that will be a strong signal of beginning of ongoing uptrend. I am discussing this in uptrend. So as this swinger is higher, and here it has got the breakout. So easily you can term it as a wave 1. This is the wave 1. Then we have got the correction pattern. There is a short correction. This happens when the trend is very strong. We generally see a very marginal correction when trend is very strong. So this is the good example of that. Trend is quite strong. Wave 2. This is the wave 2. So it satisfies our guideline or a rule that wave 2 is obviously higher than the wave 1. Wave 2's end point is higher than the starting point of the wave 1. Then we can easily get the wave 3. Wave 3 should be longest when we compare to wave 1 and the wave 5. So here you can see, here you have got the little correction here also. But as you can see, wave 3 can itself consist of 3, 9, 11 internal waves. So for like that, you can term it as a wave 3 because it satisfies our second guideline that wave 3 should be longest in the series. And if you will consider this length, then it will be the longest if in the series, and it has got the highest length in this 5 wave principle, and it is obviously greater than wave 1's length and wave 5's length. So here, and that's why if you don't get confused that why I have termed it as a wave 3, this part some correction here, but it is a if that's why they are called as the waves, because they can consist of internal waves in themselves. Any single wave can consist of so many waves in itself. So the structure will look like this. Then you have got the wave 4, the correction, and wave 5. So here wave 5 failed to cross the highest point of wave 3. That's why you will need to keep in mind the guidelines and rules. This is the wave 3. It is where if we compare, because if we will give the name wave 3 to this length, it is, if you can easily notice that this will be the shortest wave in the series, and that will not be a Elliot wave principle, because as per our rules, as per our guidelines, wave 3 should be longest in the series. So when we name it wave 3, then only it is satisfying the Elliot wave principle, and we are getting the exact structure here, that wave 5 is shorter than the wave 3, and this is the wave 4, and wave 4 isn't overlapping the wave 1. So all the principles, all the guidelines and rules, it is satisfying. So perfectly it is the Elliot wave structure. And then now if you will notice, wave 5 is shorter than wave 3, so we can look for a short trade opportunity when such things happens. Now I will show you entry points. This is the wave 4, and this is the wave 5. This is the end point of the wave 5. So I am trying to turn the, it will be easy for you to keep in mind. That's why I am turning the direction of the text. Wave 3, this is the wave 4, and this is the wave 5. So now our thing is to, our motto will be to find the entry points to open a short trade position. And another thing we are getting here, that when you will compare that this swing high is lower than the previous swing high, this swing high is lower than this swing high, and this swing high is lower than the previous swing high. If you are familiar with the technical terms, swing high is a point, highest point in the series. Suppose look at this series. This is the series. Why this is a series? Because price is there for a longer period, longer time frame. It is in consolidation phase. When the instrument goes in the sideways trend or in the series, you can notice that highest point will be called as the swing high. Like here, it is going up, up, up for 3 hour. This is the 4 hourly chart. For almost 12 hours, it was in the range, and it has made the highest point here. So this will be the highest point in the series will be called as the swing high. So downtrend has got one phenomena, that when the downtrend is about to begin, generally instrument or currency pair makes a lower series of lower swing highs. So this swing high is lower than this, and this swing high is lower than previous swing high. So this is the another swing high, you can name it, and then this swing high. So by that principle also we are getting a trading opportunity here. Already Elliott wave principle is in, we can apply here. So here, as soon as you see a price rejection, let me focus this area, that you have got the inverted pin bar, then two three things you are getting here. This will be the best trading opportunity. When you get 4 5 things in common, we have got Elliott wave principle, then we have got a series of lower swing highs. Already this is the third time, this is the end of the wave 5, and then inverted bullish pin bar. Bullish or bearish, any pin bar, whenever you spot such kind of things, so you can go for a short trade opportunity. If you will ask, it can come in your mind that here you buying pressure is visible, but sellers have successfully kept the price lower than the opening price. That's why candle has closed in red. Though the buyers tried to push the prices to the higher level, but finally seller finished their control in this instrument, in this pair. So after that, uh, instrument moved to the higher levels, but again the sellers comes into function and then they tried to push to the lower levels. So here we got the two three things, resistance, and if you will keep the pending order as soon as you see the inverted pin bar, but sometimes what happens, you can miss the trading opportunity. So both the way you can try. If you want to take a risk, as soon as this 4 hourly candle closes, you can open a trade at market level, and stop loss will be above the high of the previous swing high. At least you will need to keep some buffer so that your trade can take a breath easily. Unnecessarily, you should not get stopped out first and then the instrument will move in desired direction. So to avoid that kind of scenario, what you will need to do, keep a stop loss above these levels. So you can take the advantage of ATR indicator as well, as I have explained earlier. ATR shows the average true range. I will add this ATR into it. You will get that in volatility indicator section. So average true range shows us a range of instrument for that day, for that time being. So if you will consider that time, the USD CHF has got the range of almost 25 pips. So as if we will open the trade as soon as this candle closes, the 25 pips, you will need to keep stop loss above the price level. From these levels, it will be about 25 pips from these levels. And but our technical levels also gives us a, tells us that stop loss should be above this level. So what we can do, we can mix two three things, and if you will calculate the difference between this point and this point, it is just 15 pips. So no worries, we can keep the stop loss of 25 pips because it will be higher than if you will take the levels. If we will check the levels, it is around 1.33, 1.0036, and our stop loss will be around 20 plus 25, 1.0045 pips, 1.0045. So it will be around these levels. So even if we go for a stop loss of 1.0045, then also our trade will get the buffer of 10 pips, and which will be about pips from this level. So fair enough. You can go for a 25 pips stop loss even if you open the trade around these levels. So this is the one actually scenario I am showing you, and after as I finishes this series I will be discussing every day the trade signals based on the Elliott waves, so that I will start in the next series, but just to make you familiar and to make you practice more and more so that easily you can spot the Elliott wave, and then the how easily you can apply the this principle to find the trading opportunity. You will be trained it in yourself, so you can do that job yourself as well. That is my motto here. So like this scenario you will need to use to open a sell position when you are applying the truncated wave or failed wave principle in an uptrend. So this is the uptrend series of higher highs you got, so clear uptrend. Then we have got the five waves. We have got the wave 1, wave 2, wave 3, wave 4 and wave 5. When we compare the highest high of wave 5 is shorter than the wave 3. If you will go for a price levels, actually I have drawn the just to mark the resistance level I have kept this line price marker there. So here you got the example, perfect example. It will look like this in live trading chart, and you can this is the 4 hourly time frame, and you can apply it in on any time frame as you wish, on 15 minute to daily, weekly, monthly. So you have got the for 2 3 things in common, and you can go for a short trade blindly, because this will be this scenario will be a very good trading opportunity and hardly you will be going wrong. So similarly if you want to apply I will discuss that separately, because it will make you confused when I will if I will combine both the things in one lecture. That's why I have decided to discuss it in separate webinar. So this will be the example. You can make practice, you can look for such kind of trading opportunities on various time frame. Here you can see similar kind of structure, because there are so many things are there which you can combine in Elliott wave principle. Here you can look for similar like wave 1 it has got the wave 2, wave 3, wave 4 and wave 5. So easily when you will practice it will easily come in your mind. So like as I saw the structure it came in my mind that it is the wave 1 because it has got the breakout. Join the lowest point and highest point in the series. Like that you will need to join the 2 points. So this is the highest point and this is the lowest point in the series. So this will be a wave 2, and after that this is the lowest point and this is the highest point. This will be a wave 3. Then again the highest point and then lowest point, wave 4. So this is the highest point, lowest point and highest point, wave 5. So when you will notice that wave 5's length is lower than the wave 3. So here also we can apply a Elliott wave principle, failed wave, or we can call it as a failed wave or a truncated wave. Because see how I have found out how I marked it as a wave 1, because in general I look for a breakout. So when it has got the breakout from these levels. So these are the earlier resistance and it has got a breakout and successfully it closed above it. Then it went into correction mode. At the bottom level it has got the support here. So base also, it has got the base also, then it has got the breakout also. After that wave 2, but the correction is higher than the previous wave 1's level. So easily we can see it as a wave 2. Then wave 3, wave 4 and wave 5. So as soon as you get this kind of structure, you can look for a short trade opportunity. So that's what the main benefit of this failed wave or truncated wave, that you can easily get the short trade opportunity. For another reference, you have got the resistance here, and you can blindly go for a short trade opportunity whenever you see 2-3 things in common. As already I explained, that the another principle of downtrend, that is higher swing lows, higher swing lower swing highs. So this swing high is lower than the previous swing high, and already I explained that swing high means the highest point in that series and swing low means the lowest point in that series. So this is the swing low and this is the swing high. When you will look for the highest point in this series, you will get this point. So if you are not familiar with the technical terms, you can watch another webinars where technical terms are explained and then come back, or you can simply ask a question in the comment box whenever you see any, you get confused or you don't understand any term which I have described here. You are feel free to ask questions in the comment box and I will host another webinar on that topic. So that's it for the day, friend. Any questions, type it, leave them in the comment box. I will answer those in the next webinars. So thank you. See you soon.